Hey everybody, Jake Blickenstaff come back at you in another episode of the Northeast Georgia Real Estate Podcast. We have a lovely guest on today, the Miss Cassie Fuchs with Southeast Mortgage. She is a fantastic assistant VP and executive loan originator with Southeast. So thanks for giving me some time for us to get together.
You are so welcome. So yes, I've been in the industry for about 18 years, worked through a lot of different types of mortgages and been through a bunch of different markets. This is a unique one, I'd say, definitely affecting everyone.
For the short 6 years that I've been in real estate and just with the experience that I have up to this point, we have a pretty huge commercial and residential team. Every market shift that we come across always has different factors in it. So while yes, real estate does trend, and from an agent perspective, we look at those trends to be able to predict what the market is capable of, or is going to be doing. But it's never the same result. So you can't have the same solutions to the same problems like you did in '08.
Right.
And so that brings me into what are the current market dynamics that you're seeing on your end that we're going through right now?
So right now, obviously we have, shortage of inventory, and we have really, just the quickest increase in the interest rate that I've ever seen. The difference between rates and, 2 years ago and today, it's just amazing. It's actually changing how much people can afford in a purchase. And it's also scaring a lot of sellers out there that they can't find what they're going to want and be able to afford it because of the interest rates, right? So we also have clients who stayed home for a couple of years and through that had to take less money or no money or government money and have been racking up incredible bills on their credit cards.
Yep.
And that's what I'm seeing a lot more as I pull credit. A lot of people have maxed out their credit cards.
And that is an overwhelming theme that's going on right now. Even with the current government and Fed saying that we're not in a recession and all the politics aside,
right?
The high level of current debt that average consumers have is astronomical, the highest it's ever been.
Right.
And so with that being said, there has to be some give or take. And I'm sure with inflation and everything else going on, a lot of people just aren't feeling any relief with not only the housing market but interest rates, and their dollar doesn't go as far. Mm-hmm. And so what kind of options have you been seeing or have you been potentially proposing to your clients where they're like, I need to sell my house, I have all of this debt, but I can't get into anything else, or I don't really know what solutions are available? What have you been proposing?
So, we come at it from a couple of different angles, right? So, obviously it's really important for them to get in touch with us. First, this was going to be my absolutely do. Get in touch with your lender before you start making late payments or before you get into a debt consolidation company telling you have to be late on your payments. Because once that happens, those credit scores, and your credit score's already probably gone down a little bit because you have a lot more debt in comparison to how much room you have on your credit cards. So their credit scores are going to be a little lower just because of the usage on their credit cards. But if you make a late payment, or if you make multiple late payments, the score is going to drop so dramatically that I won't be able to help you, okay? So if you can get a life vest for just a little while, what I'm explaining is, you're going to go with a higher interest rate right now so what we try to do is we say, okay, so what you could do is sell your home, pay off your debt through that, and we can show that on our system that you're paying off that debt, so you do qualify for the new purchase, right? And yes, you're going to get a little higher interest rate right now, but it's like a life vest. Gets you out of the problem with your accrued amount of debt, gets you into the new home, and then when the rates come down, you're going to refinance into that much better rate. So this is just a life vest moment to get you where you need to be, and then Southeast Mortgage does the no lender cost refinance if you close this year. So then maybe, hopefully, and
Fingers crossed for those that weren't able to see that.
Right, and summer next year, hopefully, maybe by the time we go into voting and all the things, we're hoping to see rates in the 5s, and then you could refinance at that time at no lender cost, and be in the home you need to be in and get yourself out of the trouble of the high credit card debt. I mean, most credit card debt is at 24% interest right now. I have clients telling me, yeah, I'm making the minimum payment, but it's not even covering the interest that I'm accruing on the credit card. It's terrible.
And if you're going to be making a high payment, would you rather make a high payment towards credit card debt, which is an unsecured liability, or would you like to make a high payment towards an asset where you have the potential to gain equity on?
That's right.
And so at that point, which one's going to be the lesser of two evils for your situation?
Absolutely.
And that kind of goes with the saying that we say on the agent side of things, marry the house but date the rate.
Correct.
So you don't have to be in love with the current payment as long as you can financially afford it. And your financial situation, and obviously for any of the clients that you're helping out, you're going to advise them on, hey, this is what you're going to potentially be looking at. And so if that makes the best sense, then go move forward with that for whatever's the best situation for you guys.
And you can even use some of that equity that you're going to make off the sale of your home. You can use that to buy your rate down. I mean, we've done this as well. You yourself could probably buy down your own rate a couple of points. Above and beyond that, it starts getting to a high price mortgage. So if you need a lower rate than that, you offer a little bit higher for the purchase of the next home and get the seller to pay some of your closing costs. We can use those funds, all of them, to buy down the rate. So there's no limitation on when a seller, up to the point, in a conventional loan you can get 3%, and an FHA you can get 6%, but there's no limitation of how much we can use of those funds to buy down the rate. I had a client that was in a 7.25 or 7.5, and they used the 6 points that they were getting from the seller to buy down their rate, and they got down to like a 5.25.
That's pretty solid.
So yeah, it's a lot of money, but from their terms, the funds that they were getting were like a gift from the seller, so they used it to get themselves in a payment that they could stick with for a while.
Yeah, absolutely. That's a great strategy. And from the agent side of things, one of the solutions or strategies that we're using with our clients is, like, if there's room in the negotiation process for a property that you're looking at with a buyer and you are getting seller closing cost concessions, just like you said, you can utilize those closing costs instead of towards the down payment for the house, actually utilizing those funds to buy your rate down.
That's
so
right.
You're not actually getting any proceeds back at closing, but you are getting a cheaper loan amount for however long until you utilize the refinance option.
Yeah, you just got to know where your hurt is. Is your hurt cash to close? Is your hurt that monthly payment that you're going to keep?
Yep.
And you're only going to keep that monthly payment as long as you're going to get to the point where you can refinance. So sometimes, like today, I locked a loan, but the difference in that monthly payment wasn't enough for my client to buy the rate down, and they know that they're going to refinance as soon as the rates come down. So you just got to pick your poison. You got to decide which way you're going to go with it. But what I want to do is really try to get in front of these clients that need that life vest of getting that debt paid down, because I'm just running into way too many people that were too late on, and I can't help them at that point. I can't do a cash out refinance. I can't help them flip and sell and buy if their score drops down below the qualifiable. And if you're 1 to 2 months late on a credit card, you're down in the 5s.
Yeah, it dings you for sure.
So
and just to play devil's advocate here, if anybody that's listening to this was saying, hey, you know what, I appreciate what you guys are giving me, but I really just want to wait until those rates come down. Mm-hmm. Some of the problems that we definitively are seeing that will happen no matter what is that there are so many people that are on the fence right now.
Pent up.
Absolutely. They are so many people on the fence right now that don't want to do anything until rates come down or until prices come down or some kind of catalyst that changes the current market dynamics. But because there's so many people on the fence, that when one of those things does happen, you're going to have an influx of buyers into the market that now all of a sudden we go back to potentially 21 and 22.
Exactly.
Where people are putting 26 offers in on a house, and it's
there's
going
no
$60,000 over list.
No FHA buyers, no VA. Your stuff gets pushed to the side.
Yep.
If you don't have the cash flow to overcome those appraisal, shortages, you're not going to find a house.
No.
I mean, I'd much rather pay a little too much for a house right now and then refinance later than to be put back into that situation where I'd have to pay $60,000 over asking value just to get the house.
Or you're forced to rent something again.
I know.
For however long that
Which
looks.
is 100% interest.
Yeah.
So why would anyone want to do that?
Absolutely. So, like, with taking that into consideration, to me, it's a very simple decision. Like, if you're in the market to buy a house now, and you're not gonna, if you're not planning to sell within the next, say, 2-3 years, it makes sense to buy right now. Because I've always said that nobody that bought a house 20 or 30 years ago has ever regretted it from an equity position. So if you're going to buy the house for a long term and you plan on staying in it, who cares what you're paying for it right now as long as you can afford it?
Right.
And then essentially when the market changes, hey, take advantage of it financially and go ahead and adjust your rate or do whatever you have to do.
Absolutely. And a lot of times, especially a person buying FHA, they're going to want to refinance anyways, right? Because you keep your mortgage insurance until you're in a conventional loan.
Yep.
So, I mean, I've done this before where you wait a couple of years, you refinance, the rates are down, I get rid of mortgage insurance, and you've just knocked $400 or $500 off of your mortgage payment through that refinance.
That's huge.
I mean, it's a no-brainer, but I think the problem is that people are just getting a miseducation through the media, who's doom and gloom, miseducation, and I think they just really need to find themselves a good partner, a good agent partner, a good lending partner to truly walk them through it and make them understand it.
No, I completely agree. And being able to have somebody that's been in the business for a decent amount of time that actually has some good contacts instead of just, any agent or any lender. I'm not saying that there's not other good people out there, but you need to do your diligence on who it is that you're working with. And the way that I look at it is I want to be able to go knock on my agent or my mortgage lender's door if I have an issue. That's one of the reasons why I don't prefer to use kind of the big box name brands. Because if you have an issue on Saturday night, who are you going to be able to text or call? Like all of my clients have my direct cell phone number. All of the lenders that I work with, they have their direct cell phone number to their clients, so that way they're reachable. And to me, that's one of the best relationships that you can possibly have.
Well, communication is absolutely key. Every one of my agents knows that they can reach me on a Saturday, a Sunday, 7 in the morning, 9 at night, if necessary, because I believe in the differentiator between me and a big box lender is that I'm there with you every step of the way. And when something goes down the weekend before, I was telling Caleb the other day, we had this one situation where it was the weekend before they were going to close. It was like a Tuesday that they were going to close, and a water main broke on like a Friday night. It was like at 9 o'clock at night, and the agent calls me and says, we've got to get this fixed, everything. And literally it was all hands on deck. The agent was available, I was available, the people who, fixed everything. And you just can't get that kind of service if you have a large bank or, especially now they've got like the Zillow agents or something. You just can't get that kind of service out of that. So truthfully, I think this market is unique, but it's going to be just like every market. It's a season, and it changes. And if we can just help people get through this, then we'll all come back out on the other side with a little bit better interest rate and a home that we enjoy. So
absolutely, and I'm glad that you brought up like what this current market looks like. Let's put some substance behind that. So I just pulled the listing and active market details for the greater Athens area to include Clark County, Oglethorpe County, Madison County, Jackson County, Oconee County, and Barrow County as well. So these are all the stats of everything that happened for August of 2023, in case anybody comes across this at a later date and time, so that way you know exactly kind of where we're at in the market. Active listings, we had 502 last month as of today. New listings, we had a total of 226, and total sales was 156. So just that alone shows, for one, that's a very limited number of inventory. Like only 226 new properties came on the market, and out of those 226, there was 156 of them that sold. That's like almost 1 for 1.
Right.
The median list price that we had was $393,503, and the median sold price was $375,000. So we're going to be a little bit lower than if you get into like the
Johns Creek.
yeah, Johns Creek, Gwinnett counties, kind of downtown areas, or any of the closer outlying suburbs of Atlanta. And then the expired listings, this one keeps popping up for the last couple months, and I find it pretty interesting, is the total number of expired listings was 248. So we had 226 new properties coming on the market. 248 of those expired. So that's, to me, that means that you still have inexperienced agents out there that are giving bad advice to sellers or enabling bad advice to where they think the home is worth more than it is, based off the days on market, which is right around about 46 days right now. And then you still have sellers that are out there chasing 21 and 22 home prices,
Right.
which unfortunately it can't be justifiable in the sense, like, you can't just throw a price of a property at the market and then expect to get 15 offers that day.
Right.
So you actually have to have an agent that's experienced, that knows about the trifecta of, the move-in ready house that's in a great location and priced appropriately. You have to price ahead of where the market is. So with all that being said, do you have any other kind of final thoughts on any individuals that, they may be entertaining selling, they've been holding off on it, they might have some of that debt that you're talking about? Like, what would be like your 1, 2, 3 points of like, hey, if you're in this situation, go ahead and do this, and then obviously let's find out how we can get in contact with you as well.
Absolutely. So, I've been in this business a long time, and I tell people all the time, you cannot wait on the rate. You can't wait on the rate. You've got to make your move when it makes sense for you, right? So if you do have those mounting credit card debts and they're feeling like they're a little out of control, but you're trying to hold on for when the rate comes down, you need to understand what the most important thing to you right now is your outgoing monthly debt. Whether it's in a house or it's in credit cards, all of it put together needs to be in a comfortable place. So my suggestion is take a look at your credit cards, take a look at what you have going on, then call the lender, or if they call the agent, have the agent refer you to your lender and talk to them about what kind of comfort what kind of monthly payment are you comfortable with. If you didn't have that credit card debt, if you were able to take care of that credit card debt, what kind of monthly payment would you be comfortable with? And then work it backwards. Right now the interest rate is here, so your payment needs to, your purchase price needs to be here to give you the monthly payment that makes you comfortable. Then you do have some room, right? Yeah, if this is the payment I'm comfortable with, but I could go up $200 if I found the right exact place, right? But work it backwards, get your pre-approval based on paying off all the debt, and then go look at the houses that you're comfortable with the payment. Because another thing that happens is that people go out and start looking before they get pre-approved. They fall in love with the house that's in a $500,000 range, right? They've already walked through it. That's their house. That's what they want. And then they come back to me, and then they're not comfortable with that monthly payment.
Yep.
And they want to blame it on the rate, but the problem is it's usually not the rate that's making it, it's the house that made it that payment. And then we have to bring them back down to a $350,000 house, and then nothing makes them happy, right? Yep. This will never be a $500,000 house. So it's really hard when they get their heart set on that. So always tell all my agents, I know you're supposed to take them out or whatever. Please let me pre-approve them first. Please let me get them happy with what they qualify for. So when you show them these houses, they can fall in love with what they're qualified for. So I'm Cassie Fuchs. I'm with Southeast Mortgage. You can reach me anytime, day or night. Are you going to share? Should I share a phone? Should I share?
Absolutely. Phone number, any socials that you have, and then below this podcast, either in the description or whatnot, I'll have all of Cassie's information as well, so that way you guys can reach out if you are in the market soon and you need somebody. I would highly recommend Cassie. She's at the absolute top of my list whenever it comes to any potential residential mortgages. So, yeah, definitely.
Sure. All right. So the phone number is 404-825-9154. You can send me an email at closethamwithcassie@southeastmortgage.com. And also, I'm on Instagram at Cassie Fuchs, or Fuchs Mortgages on my Instagram, and Cassie Fuchs on Facebook. And I have a lot of great information on my social media. And yep, that's it.
Awesome. Well, I appreciate your time, and definitely the wealth of information. Is good to be able to provide this education to people so that way they can make the best decision for whatever their situation is. And like any market, like what Cassie said, this is just a season, so this too shall pass. And let's get some people in some good houses, shall we?
Sounds good.
All right. Thanks,
All right.
Cassie.
Thank you.
So as we wrap up another episode of the Northeast Georgia Real Estate Podcast, I want to extend a big thank you to our remarkable guest, Cassie Fuchs with Southeast Mortgage. Your insights are fantastic, definitely a wealth of knowledge, and I'm truly grateful for your time and participation. Now, to all you property owners out there, whether you're considering buying, selling, or leasing commercial or residential real estate in the greater Athens, Northeast Georgia area, or even the western upstate portion of South Carolina, remember that we're here to support you. Our dedicated team is ready to guide you through every step of your real estate journey. Our team's a powerhouse, featuring specialized commercial agents who excel in leasing and sales across diverse categories, including office, retail spaces, industrial properties, and multifamily residences. On the residential side, our agents specialize in everything from traditional single-family homes to luxury estates, and even navigating the intricate world of REO and short sales. And here's something exciting for all you licensed agents across the Southeast, covering South Carolina, Georgia, and Florida. If you're seeking a supportive community of real estate professionals who can act as your mentors, advisors, coaches, and friends, look no further. At VPR First Team, we provide exclusive one-on-one access to some of the most successful commercial and residential realtors and brokers in the field. So if you're looking to learn, grow, and thrive in your real estate career, or if you're on the hunt for a new home, don't hesitate to reach out to us. We're here to make your journey a smoother one. So thanks again for joining us on this episode of the Northeast Georgia Real Estate Podcast. If you've enjoyed the insights shared today, remember to subscribe, rate, and leave a comment or even a review. But until next time, keep those dreams alive, and we'll catch you on the next episode.